Welcome to Anafram Market Perspectives.
Anafram Market Perspectives. Monday setup. Tariffs on trial, Fed week, and big earnings ahead. Welcome back to Anafram Market Perspectives. If you're new, don't forget to subscribe and turn on alerts. In the next 5 minutes, we'll set you up for the week with markets, tariffs, economic data, earnings, IPOs, volatility, and a quick look at 3 names on our watch list. S&P 500 pre-market snapshot. The board is cautiously risk-on to start the week. Microsoft plus 1.77% and Apple plus 1.76%, both traded higher, supporting mega-cap tech. Tesla plus 7.36% led the tape, showing momentum strength. NVIDIA plus 0.37%, AMD plus 1.86%, and Broadcom plus 0.07% were mixed, keeping semis choppy. Alphabet plus 0.25% and Meta plus 0.63% ticked higher, but Amazon minus 0.78% lagged. Oracle minus 5.09% slipped after its earnings pop faded. Financials such as JP Morgan plus 0.44% were steady, while defensives held flat. Takeaway: buyers are sticking with profitable mega caps and momentum plays like Tesla, while retail and post-earnings names are under pressure. Trump tariffs, why this week matters? Court challenge. A federal appeals ruling questions the legality of Trump's tariff framework under emergency powers. The case now goes to the Supreme Court on a fast-track schedule. If the White House loses, Treasury could be forced to refund billions, shaking deficit plans. Trump's warning. The president said reversing tariffs would mean giving back trillions and trillions of dollars, calling the case critical to America's economic leverage. Global angle. Trump asked NATO countries, including Canada, to apply 50 to 100% tariffs on China until Russia ends its war in Ukraine. This adds fresh geopolitical risk across autos and electronics. Bottom line, tariffs are still in the price today, but refund risks, legal twists, and NATO pressure keep businesses guessing. Import-heavy firms remain the most vulnerable. Macro calendar, the week ahead. This is a big data week. Sunday, China industrial production, 5.7% year over year, and unemployment, 5.2%. Monday, U.S. Empire State Survey, Eurozone trade, Canadian wholesale sales. Tuesday, U.S. retail sales, 0.2% versus 0.5% estimate, industrial production, and Canada CPI. Japan trade data overnight. GDP now update holds at 3.1%. Wednesday, Fed Day, housing starts, crude inventories, Bank of Canada decision at 2.5%, and the FOMC rate cut decision with projections in the afternoon. Thursday, jobless claims, Philly Fed survey, and the Bank of England meeting, expected hold at 4%. Japan CPY and Bank of Japan follow overnight. Friday, UK retail sales, Canadian retail sales, U.S. Michigan sentiment, and rig counts. The Fed is the week's steering wheel. A cut with calm guidance helps risk. A cut paired with sticky inflation projections means more chop. Earnings to watch: a busy week with at least 5 names per day. Monday, Dave & Buster's, Play, Cantaloupe, CTLP, Resolute, RZLT, Radiant, RLGT, and High Tide, CTI. Tuesday, Ferguson, Ferg, Aspire Tech, ISPR, Evolution, Petroleum, EPM, Brandhouse Collective, TBHC, and Flux Power, Flux. Wednesday, General Mills, GIS, Manchester United, ManU, Cracker Barrel, CBRL, Aperion X, IPX, and Nano Dimension, NNDM. Thursday, FedEx, FDX, Lennar, LEN, Darden Restaurants, DRI, FactSet Research, FDS, and Scholastic, SCHL. Friday, only one major name, Tambourine Resources, TBN. Why it matters: FedEx gives us global demand trends, Lennar shows housing resilience, General Mills tests consumer pricing power, and FedEx plus Darden round out key signals on shipping and dining. IPOs of the week. Netskope, NTSK, NASDAQ, targeting $812 million at 15 to $17 per share. Cybersecurity, watch SaaS multiples. StubHub STUB NYSE, aiming for $851 million at $22 to $25 per share. Ticketing giant tests discretionary demand. DT House, DTDT, NASDAQ, much smaller, 10 million raise at $4 to $5 per share. Liquidity risk is high. These deals give us a read on investor appetite for tech and consumer names. Volatility check, the VIX sits at 15.65, which is calm but not fully comfortable. Under 16 usually supports momentum trades. But with the Fed and tariffs on deck, options desks are hedging for a quick spike toward 18 to 19 if headlines surprise. Bonus, our watch list, 1 ETF plus 2 stocks. QQQ ETF, still trading above the Ichimoku cloud with steady support. Pullbacks toward 584 to 586 have been bought. MACD momentum is cooling but not broken. Simple read, dips are buys but don't chase highs into Fed week. Oracle. After earnings, Oracle spiked up but drifted lower for 3 days. It's now sitting near cloud support. If buyers step in, it can stabilize, but below 288 would look weak. Short term, this one is wait and see. Tesla, strong breakout. Higher highs, higher lows, and steady momentum. It's now consolidating near 395 to 396 with cloud support under it. As long as it stays above 392, the uptrend looks healthy. Game plan, positioning, balanced growth, QQQ Tesla with defensives. Be patient with Oracle. Catalysts, the Fed, tariff headlines, and Thursday's earnings slate. Tactics, buy dips on strength, fade extremes around Fed day. Question for you. Are tariffs this week's trade, or do you see them as the bigger earnings story for 2025? We'll be back Monday evening with updates on the Fed, earnings reactions, and IPO levels. Stay tuned, stay strategic.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives.